Small business owners usually record all the receipts in their accounts thinking that they could save some money by paying lesser taxes. But do you know that these receipts could also cause you to pay more taxes and even penalties? So in this Receipt 101 class, you are going to learn everything you need to know about receipts so that they can save you money. If we are just meeting, I'm Sharon Tay from Nuts Accounting and I've been doing accounting for the past 14 years. So let's start with the basics. Small business owners usually make purchases in store for things that are used by the business, such as stationeries, packaging boxes, meals with your customers, and so on. Remember to get the receipts so that you can record them in your accounts if you want accurate financial reports. These receipts will be your proof that the bookkeeping transactions are legit during an audit. Tip number 1. How to save money on taxes with receipts. So, how to save money on taxes with receipts? Here's an example of how this works. Let's say your receipt is $1,000 and your tax bracket is 20%, so the tax amount for this receipt is $1,000 times 20%, which is $200. So that means when you record this $1,000 receipt, you will save $200 of taxes. And let's say the tax amount before adding this receipt is $9,000. Once you added this receipt, your new tax amount is $9,000 minus $200 and your new tax amount is $8,800. Wow, you can convert the receipts that you usually throw away into real money. That's pretty tempting to record all the receipts that you can find in your house. But wait a minute, don't do that. Yes, the right receipts will save you money on taxes, but the wrong receipts, instead of saving you money, will cost you more money than the amount that you could save, and you could be paying unnecessary penalties. I'll explain more about the right and wrong receipts later in this video. So let me explain this with the same example of your $1,000 receipt, but this time it is the wrong receipt that will cost you more money. Let's say you have submitted your tax based on the previous example where your total tax amount is $8,800. And let's say 4 years later, an auditor from your government's revenue body, such as IRAS, decides to pay you a visit. He audits your account and tells you that this receipt is not allowed to be claimed, which means that your total tax amount should be $9,000. So you have paid $8,800 and now owe $200 of taxes. Let's say you pay the $200 of taxes now, which is 4 years past the payment due date. This $200 of taxes is considered a late payment. Let's say the late payment interest is 10% per annum, which equals $20 of late payment interest per year, times with the number of years that you are late, which is 4 years, so your total late payment interest is $80. And because you have submitted your tax wrongly, you will need to pay a penalty for that. Let's say the penalty is only $500, which is pretty cheap because it could go up to thousands of dollars. So in total, now you will need to pay $200 of taxes plus $80 of late payment interest for 4 years plus $500 penalty for submitting your tax wrongly equals $780. And when you add the $8,800, which you paid 4 years ago, the total amount that you have paid for this tax is $9,580. So how much money has this wrong receipt cost you? If you did not record the wrong receipt in the first place, you would have submitted and paid $9,000 only. And that's it. No late payment interests and no penalty for wrong filing. When you record this receipt, you thought you could save $200, but now you are paying $580 more. That's a lot of money that you could reinvest in your business. Speaking about bookkeeping, I think you will be interested in our Master User Academy Level 1 mini course, which is completely free. If you are new to bookkeeping, confused about where to start, not sure what to do with your receipts and invoices, or you're just frustrated that bookkeeping takes up a lot of your time, then this free mini course is tailor-made for you. Our step-by-step guidance will kickstart your bookkeeping journey and boost your confidence and skills to efficiently complete your monthly and annual accounts so that you can use the financial reports to grow your business faster. This mini course is absolutely free for you, so sign up today at nutscounting.com/400. Tip number 2. How long should you keep the receipts? So, how long should you keep the receipts? You are required by law to keep your business documents for 7 years if you are in Malaysia and 5 years if you are in Singapore. If you are from another country, I suggest that you keep them for 7 years. Do check with your local accountant for the best advice on this. If you threw away your receipts or did not keep a clear copy of your receipts so that the auditor could easily read the details, then it will be considered non-compliance and there will be penalties which will cost you money. I suggest that whenever you receive a receipt, keep a soft copy version of it when it is clear. We'll discuss more about how to keep your receipts later in this video. Tip number 3. The right receipts will save you money. In the previous tip, you have just learned how the right receipts will save you money on taxes, while the wrong receipts will cost you money. So let's learn how to avoid costly wrong receipts. The right receipts are the receipts for your business purposes only. Wrong receipts are not for your business purposes and are not allowed to be claimed in your business. Receipts for personal expenses such as pet grooming, new clothes for your kids, flight tickets and hotel receipts for your family holiday are considered wrong receipts and they are not allowed. Here are some examples of the right receipts and wrong receipts. For e-commerce businesses, you can claim receipts for bubble wraps and packaging boxes. But if you buy packaging boxes for your house moving, then it is a personal expense and not allowed to be claimed. If you buy stationeries to be used in your office, then it is allowable. But if you buy coloring books and color pencils for your kids, it is considered personal expense and not allowed to be claimed. If you pay rent for your office, then it is allowable. But if you pay rent for your home, then it is not allowable. If you are working from home, later in this video, we are going to talk about how to split the rent for your business portion. Petrol and toll expenses to your customer's office are allowable, while petrol and toll expenses for weekend shopping are not allowable. Aircon service expenses for your office are allowed, but aircon service expenses for your home are not allowed. Utility bills for your office are allowed, but utility bills for your home are not allowed. If you are interested to learn more about receipts, we dive deeper into this topic in our Master User Academy Level 1 mini course, which you can join for free at nutsaccounting.com/400. Tip number 4. How to split expenses for the business portion. There are quite a number of expenses that you may use for both business purposes and for personal usage. If you work from home, then it's even more tricky because most of the things that you pay for your home, such as your utility bills, will be used for business purposes as well. It will be unfair to you if you pick up 100% of the electricity bill as your personal expense and lose out on the chance to save money on your taxes. On the other hand, we do not want to submit 100% of the electricity bill as your business expense and risk paying more money for the personal portion of it. And that's why you need to learn how to split the expense into 2 portions, one for your business expense and one for your personal expense. I will teach you the general rule of splitting your expense, but do check with your local accountant for specific rules or calculation formulas according to your local government's requirements. Here is the formula to split your expenses for your business expense. First, let's calculate the percentage of the number of hours that you work from home per week. Let's say you work 8 hours a day for 5 days a week, so that will be 40 hours per week. Divide this by the total number of hours per week, which is 7 days times 24 hours equals 168 hours. And times this with 100% to get the percentage of the number of hours that you work from home per week. In this example, it is 23.8%, so I'll just round it to 24% for easier calculation. This means that every week, 24% of my time is working from home. Now let's use this percentage to calculate the business expense. If your utility bill is $100, times it with 24% to get the amount for your business expense. Your business expense is $24 for this utility bill. If you pay rent for your home, then you will need to split the rent and record your business portion only. If your rent is $2,000 times 24% and your business expense is $480. Once you know your percentage, it is pretty easy to split any bills or expenses for your business portion. But sometimes you do not need to split the expenses at all, even if you work from home. For example, if you have a dedicated room in your home that you only use for your office, then the aircon service expense for that room will be 100% allowable as your business expense. If you got value from this video, click on the like button, and if you have any questions about bookkeeping, QuickBooks Online or Xero accounting, type it in the comments below. Now let's continue with tip number 5, how to keep your receipts. So how should you keep your receipts? I suggest that you keep a soft copy version of your receipts and the original printed receipts as well. This is because some government has not fully adopted digital copies yet. Before you decide to throw away your original printed receipts, do check with your local accountant for the best advice on this. To keep a soft copy version of your receipts, you can easily take a photo of the receipt with your smartphone or scan the receipt with a scanner. Then you can upload the photo to your cloud storage such as Google Drive or iCloud for easy storage. Alternatively, you can also keep the photo offline on your laptop. I personally keep my receipts organized into folders. The first folder is the financial year, and then keep your receipt in its relevant subfolder, which is the expense account name. So if it is an electricity bill, then I'll keep it in the electricity bill folder. I prefer to name the receipt file as the receipt date, followed by the name of the supplier or the shop where I purchased from, and then followed by the amount of the receipt. This naming format will be easy to look for a receipt. For example, I will save my Xero accounting invoice as 202-40801-0-$40. For hard copy of your receipts, you may organize them in the same way, but instead of folders, you will use file dividers for each expense account. If you want to save time and do 2 tasks in one go, then I suggest that you use an app such as HubDoc app or Xero Expenses app. This is my favorite way because it is quick and easy. Just take a photo of your receipt from the app, upload and record it directly to your accounting software, and you're done. Here's a bonus tip for you. The biggest problem with receipts, especially thermal receipts, is they fade away easily. The details of the receipts will gradually fade away and eventually becomes a blank paper. Whenever you get a receipt, record it immediately when it is still clear and easy to read. If you don't have the time to process your receipts, then at least record your receipts once a month. And if you have been doing bookkeeping once a year, then let me introduce you to the power of bookkeeping. When you do bookkeeping regularly, you and your business will enjoy a lot of benefits from it. So let's discover why bookkeeping is the key to the success of your business. If you click or tap on the screen, you can watch that video. If you want to watch more videos on bookkeeping and accounting tutorials, subscribe to our channel. I'll see you in the next video.